Welcome back. There's some very interesting dynamics happening right now in our US housing market. So for example, there's approximately 25% more houses for sale nationwide compared to the same time frame 1 year ago. To start the year, we were only up by about 6%. Also, the share of price reductions also increasing as well. Some very interesting dynamics to say the least. In today's video, I'll share my own analysis of Realtor.com's data. And also I'll share updates regarding home prices, housing inventory, price reductions, and much, much more. Also stay tuned toward the end of this video. I'll provide a summary and also kind of like a snapshot about what happened with our US housing market this past week. So I have a lot to share. Let's begin today's video. This is a report I make for you guys each and every week. You guys seem to like it, so I like making the video as well. But in any case, this is a report here that I didn't even read, just like my previous videos. Instead, go to realtor.com/research/data. Click on this link right here. And when you do that, it takes you this information. So the most recent data we have from them is for the week ended March 23rd. Let's first have a look at the changes in the median list price. These are asking prices of newly listed houses is flat on a year-over-year basis. In fact, the second consecutive week in which asking prices are flat year-over-year. The year-over-year change in asking prices have been relatively flat, by the way, for the past 2 months, due to an increase of housing inventory, more price reductions, which I'll share with you guys here in a little bit, and elevated rates as well. It's also possible we're seeing more home buyers waiting on the sidelines, waiting for rates and or home prices to decrease, which is contributing to asking prices being relatively flat for the past 2 months. Okay, let's change gears slightly here and talk about housing inventory, the changes of housing inventory compared to the same time frame 1 year ago, because again, that increased by nearly 26% year over year. That, by the way, is the biggest annual increase since May 2023. There's been more houses for sale compared to last year for 20 consecutive weeks. In other words, rising inventory ever since mid-November last year, giving more options for home buyers, which is a positive sign. Yet housing affordability at all-time record lows though. So good news and bad news, more options for home buyers, asking prices relatively flat, but home sold prices increasing by about 5% according to Redfin. And of course, according to Redfin as well from a couple of days ago, they reported all-time record lows for housing affordability due to elevated rates, but also rising prices as well, which I'll share some snapshot regarding that here in a little bit. Also, in my personal opinion, inventory has been on the rise due to two main reasons: an increase of newly listed houses and also due to a decrease in home buying demand. So overall, pending home sales are still down on a year-over-year basis. Let's also take a look at data from altosresearch.com as well regarding inventory levels. So by my dumb math, there's approximately 99,000 more homes for sale right now compared to 1 year ago. That's an increase of 24% year over year. Also, what I'm more focused on is really the rate of inventory growth, because the rate of inventory growth in 2022 was fast, to say the least. And that's why home prices tanked in the last half of 2022. So here's a kind of a snapshot regarding the year-to-date increase or decrease of inventory levels. So there's been slightly more houses for sale right now by the end of March compared to the first week this year. So inventory growth is only increasing by a slow rate, increasing by 3% so far this year. Compare that to the same time frame last year this time. This is January last year through the end of March last year, inventory decreased by 12%. So this year, inventory rose by 3% so far this year, versus last year's time, it decreased by 12%. Additionally, when looking at inventory levels compared to pre-pandemic levels, we have approximately 39% fewer houses for sale on a national level compared to 2019. Let's take a look at a chart from altosresearch.com. Approximately 512,000 homes for sale right now, 1 year ago, approximately 414,000. But at 513,000 right now, way above 2022 and 2021, but below levels in 2020 and 2019. Look at that, 2019, 835,000 homes for sale. Now we only have about 513,000. Like I mentioned, one of the main reasons why inventory has been increasing compared to 12 months ago is due to an increase in the number of newly listed houses. In the previous week, in my video I made a week ago, new listings increased by 17.8% year over year. That was the biggest increase since May 2021. So approximately a 3-year high in the amount or the increase of new listings. This week, a little bit different, came down slightly to 14.9%, but it's been higher compared to the same time frame last year for the past 22 weeks in a row. And that's one of the main contributors to rising inventory levels, an increase of more people listing their houses for sale, an increase of new listings. All right, let's change gears slightly here and talk about days in the market, or I should say the change compared to the previous 12 months. Because this last week, it took 1 day faster to sell a house compared to the same time frame in 2023. That's been a common thing we've been seeing here because houses have been selling faster compared to last year for the past 25 consecutive weeks. Before that, houses took longer to sell for over 1 year, for 58 consecutive weeks. Again, this is a lagging indication of our US housing market because this is based on closed home sales. Also, let's have a look at the share of price drops, or let's have a look first at the increase in the number of reduced price listings. So there's approximately 39.1% more price reductions right now compared to this time in 2023. That, by the way, is the biggest annual increase since April 2023, but not nearly as large as the triple-digit gains we saw in the last half of 2022 and the first part of 2023, rising by over 100%. Now we're up by 39% year over year. Additionally, this marks the 9th consecutive week of year-over-year increases in the number of reduced price listings. It also has been accelerating each and every week as well, which is this period right here. Every single week, we've been seeing an increase in price reductions. In my personal opinion, the rise of price reductions has been increasing for two main reasons. Due to a rise of inventory levels up by now more than 20%. And on top of that, we're seeing more homeowners sitting on the sidelines due to 7% rates. In other words, a decrease in pending home sales on a year-over-year basis, a lack of demand due to a giant housing affordability issue nationwide. So that's a look at the number of price reductions compared to 1 year ago. Let's have a look at the share. So the share of price drops, according to Altos, is at 31%. This means that 3 of every 10 houses for sale right now have reduced their asking prices. That is the share of price drops at 31%, roughly above 30%. This is a little bit higher compared to 12 months ago when the share was 30%. But at 31%, this is much higher, about twice as high compared to 2022 and 21, and also higher compared to 2020, as well as pre-pandemic levels in 2019, when at that time the share was roughly 29%. And by the way, if you guys want to see home prices decrease, look what happened in 2022. The share price drops going from 17% by the end of March, and by the time we hit November, we're at 43%. So in a span of just 8 months, the share of price reductions tripled, which of course caused home prices to decrease greatly in 2022. All right, that was a lot of information to uncover here. So let me provide a summary and also some a snapshot about what happened with the U.S. housing market this past week. So number one, asking prices have been relatively flat for the past couple of months due to an increase of housing inventory, more price reductions, and elevated rates. Number two, housing inventory increased by nearly 26% from 1 year ago. That was the biggest year-over-year increase since May 2023. This is likely due to lackluster home buying demand and a significant rise in the number of new listings. However, even though the number of new listings have been on the rise, there's still approximately 39% fewer houses for sale right now compared to the same time frame in 2019. And number three, average 30-year fixed rate mortgage rates have decreased by about 1.1 percentage points since October 2023. But because approximately 89% of homeowners who have a mortgage on their house have an interest rate below 6%, that's per Redfin, based on their own analysis of data from Q3 2023. That has been limiting the amount of people listing their houses for sale, and thus keeping housing inventory well below 2019's levels. And a friendly reminder here, we do not need to see inventory levels increase to pre-pandemic levels because look what happened in 2022. Inventory was not even close to 2018 and 2019's levels, but the rate of increase was really caused the housing market to pull back, and that's why home prices decreased, even though they were far below pre-COVID levels. And that's why I see right here. Let's watch the rate of increase in the coming months. Number four, the share of price reductions has been relatively flat from this time last year, but much higher compared to the past few years, based on data from altusresearch.com. Also, houses have been selling faster from the same time frame in 2023 for the past 25 weeks. What are some potential huge changes ahead? And of course, I am not a real estate market fortune teller. Number one, like I mentioned, average 30-year fixed rate mortgage rates decreased by 1.1 percentage points since October last year, and that should cause an 11% increase in buyers' purchasing power. However, though, according to Redfin from Thursday, Redfin reported that housing affordability reached a new all-time record low. So here's something added to provide some context regarding this. So the housing affordability is at all-time record lows. I think we all can agree that that's due to elevated mortgage rates, but also due to a rise of home prices. So for example, the median list price or asking price on a national level as of October of 2023 was at $375,000. That was back when the average rate was around 8% for a 30-year fix, according to the Mortgage News Daily. Then, as of March this year, that increased to $405,000, when rates right now are around 6.9%. So you guys get that? The housing affordability crisis we're having right now is due to elevated rates, but more importantly, it's due to a rise in home prices, increasing by $30,000 ever since October 2023. That's the main reason why we have this lack of housing affordability in the US. And of course, please leave a comment below with your thoughts regarding this. Do you guys agree or you guys disagree? Let me know. Number two, housing affordability, again, is still a huge hurdle. Rates have more than doubled. And of course, home prices have increased by about 40% ever since 2019. Number three, early signs of home buying demand have been absolutely all over the place due to the volatility in rates. The most recent data we have from the MBA, which shows the amount of people who are submitting loan applications to buy houses, that's for the week ended March 22nd, decreased by 16% year over year. Also, the National Association of Realtors reported that pending home sales this February fell by 7% year over year. That's February last year compared to February this year. Their pending home sale index also remains very close to record lows. The record low for the amount of contracts being signed, according to NAR, was back in August last year. Looking at the data we have right now for February, it only has increased by 4% from all-time record lows, and their data goes back to the year of 2001. So I guess we can say that the amount of contracts being signed on a national level, at least, are still at very low levels. In stark contrast to this, though, new home construction sales, which by the way is a measure of signed purchase agreements or a deposit being taken by the home builder from the home buyer, increased by 6% year over year. this February. So existing pending home sales decreased by 7%, whereas new home sales increased by 6% during that same time frame. So home builders offering closing cost credits, lower rates, and also free builder upgrades has been helping increase home sales for them. It appears, though, that our housing market is highly rate dependent, and of course, the data coming in is ever changing, and real estate is local. Number 4, the direction of our U.S. housing market will depend on unemployment rates, inventory, and the balance between supply and demand. What I'm being closely following is inventory, because inventory has been increasing, and if it starts increasing big time, that's going to be a recipe for disaster. Or if it just kind of levels off, that would be a signal that we have a strength in our housing market. So I'm definitely going to post frequent videos about inventory changes, because in my opinion, that's something very close we should follow here, especially as we're in the spring home buying season. And number 5, this is the most important one, of course. I appreciate you guys watching today's video, of course, for subscribing to my YouTube channel. If you guys haven't subscribed just yet, I invite you to do so. Also, check out my link below if you guys want a real estate agent referral, or go to realestateteamfinder.com. Hope you have an awesome day and an awesome weekend, and I look forward to seeing you in the next video.